Stock, crypto, and option trading has large potential reward, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Good morning, everybody. This is Anita Ward. You can ring my bell, and that's certainly what we've been doing with our sniper trades over the last, well, several months at this stage. So welcome, everybody. Good morning. Good morning. Let me see everybody's face. Yes. Hello. Hello. Good morning.
Morning.
How's everybody doing?
You're freezing.
It's in the 40s here in Houston. It's freezing.
It's -15 in Montana.
Oh,
Let me share you a little bit of heat from Costa Rica.
sunny, warm weather in Costa Rica.
That's brutal.
Yeah, isn't it? All right, everybody, let's get started. We have an hour. I'm gonna do my deal here. Let's go right into the market update. Here's my market update slide. And I'm going to go into the futures. Well, actually, before I do that, let's just take a look at what's in the news at the moment. And, you know, Christmas is what, Sunday? So this week is going to be fairly light in trading. And then next week is the week between Christmas and New Year's Eve. The markets are closed the next 2 Mondays. Christmas is being observed on the 26th. Markets are closed on the 26th. They're also closed. What is that following Monday, the date? Is it the 2nd? Yes, it's the 2nd. So the markets are closed on the 26th and the 2nd. The volume is probably going to be fairly light this week. Not a lot in the news. I guess that's the point. The reason I raised it is that there's just not a whole lot of stuff in the news other than Elon Musk doing what he's doing over at Twitter. He's been asked to step down as CEO. So it's just typical Elon Musk stuff. I tend to stay away from stocks like Twitter when there's this kind of news. You just never know where that stock's going to go, especially with Mr. Musk. He's a bit of a volatile human and he does some crazy stuff. So I would stay away. But if I look through the list here, I don't see a lot of stuff happening. Moderna got upgraded today. So we'll take a look at Moderna. And typically what I do when I read through the news is I'll create a list of stocks. So I'm just going to create a Word document here. And we're just going to move through and just kind of skim through the market, see if we can find any opportunities. Moderna looks like it might. We'll have to look at it. Not sure what the stock's doing pre-market, but we're going to find out for sure. So Moderna is a potential stock for us. This is what I do every day. American Airlines severing ties with airline Mesa. Maybe American Airlines we could look at. So these are all news-based potential opportunities. Hey, Gerardo, you saw Avatar, didn't you?
Yes, I did.
And did you like it?
Yes, I did.
Yeah, we're gonna go see it this week. It's open to 134 million at the box office this weekend, which was just missing their expectations. So yeah, it's just interesting. Sam Bankman-Fried is, bad boy, lots of stuff happening there. Goldman Sachs named SolarEdge Technologies and First Solar top picks for 2023. So maybe we could look at First Solar, FSLR, I happen to know the symbol. And then SolarEdge, I don't, so I'll have to look that up. Unless somebody else knows. So maybe some stuff there we could look at. Argentina wins the World Cup. That was probably the best soccer match I've ever seen. 3-3 tie, overtime, and then penalty kicks. Amazing. Let's see what else. I mean, nothing really there. I mean, there's not a lot going on. It's the holidays, that's what's up. Twitter, Elon. Let's see. I've looked through here. I don't see a lot. That's the thing. No. Okay, well, that's what's in the news at the moment. News is light. It's holidays, and that's that's just the way it is at the moment. So let's go through the futures a little bit and see what's up in the market. So I'm going to start. I've given you these future symbols before, and I have them in a list on my Thinkorswim account. This is my simulated account, and I've got all the future symbols. Let's just move through them one at a time. And here is the S&P 500. The /ES is the symbol. If I can get there we go. So, you know what's been happening. Recessionary talks are filling the air. The markets came down hard beneath the 200-day average. We've now bounced off the 50. We are, we're now below 3,900, which was prior support. That becomes resistance at the moment. We have on Friday breached the low of the 50-day average, or the low breached the 50-day average. And then today we're up just a tiny bit, pretty flat open at the moment on the S&P 500. I would say down from here, everybody, down to sideways without a lot of volume. Let's take a look at a monthly chart. I look at these sometimes. So this is a monthly chart. Every bar is a month. And so this has been our 2022, and obviously we've come down over the balance of the year. You can see 4,200 is super strong resistance since when? Since May. We have yet to break back above 4,200. Doubt that's going to happen. Probably not until next year either, given the thoughts of recession and what's going on with interest rates. I would expect further downside from here. Just a general overview or an opinion about where the markets might go next, just based on economics for the most part. Let's take a look at the Dow Jones Industrial Average /YM, similar pattern. The only contrary indicator to further downside is the 50 crossing above the 200-day average here. This is called a golden cross, and it's a lagging indicator, of course. It's lagging by at least 50 days. So it lags, and it can signal further upside. And what I know makes that a potential bullish signal is because everybody believes it as a bullish signal. So it becomes self-fulfilling, and that bullish cross there, red above the blue, 50 above the 200, could signal some buying enthusiasm. There is strong support right here at 33,000, and then again, of course, at the 200 and the 50. So we may see a bounce there. We'll see a bounce unless we don't see a bounce. Let's look at the NASDAQ /NQ, just like the the S&P 500 chart. It's come down below the 50. 3 big down days? Friday, today, flat day, flat on the open. Don't think we're going to see a lot of movement that much, quite frankly, over the next couple of weeks. So we're gonna find some trades. There's always trades. Russell 2000, the small caps, same deal. Now this one has dropped well below its 50-day average. There's strong support at 1760. That breaches, and the reason I keep mentioning support is if those support levels are breached, go to the next round number, and that's your target. It's that simple. So we've now cracked below. Let's see, the highs here. We're right at 1780-ish, which is a resistance. The futures have breached slightly above this morning. Now they're below, so 1780 is resistance. If it breaks 1780, expect it to go to 1800. If it breaks below 1780 and stays below, expect it to go to 1760. And that's really the process for predicting a short-term market move from here. So let's look at the VIX, see what the VIX is up to, /VX. These are the VIX futures, and the VIX futures are flat. Everything's flat. Everything is flat. Let's look at the VIX. This is the actual VIX, and yeah, low end of the range options are still relatively cheap. That's the story. That is the story. Let's take a look at bonds /ZB. Bonds have been rising and now coming down a bit, perhaps because of the recent news about the interest rate ceiling being higher than previously thought or expected. But still, the trend is still decisive, a bullish trend in in bonds. Bonds are considered safer than stocks, a risk-off asset, and we may see some buying in bonds going into the end of the year. And then I'm thinking 2023 bonds will probably start rising if the markets, in fact, do continue a corrective move. Let's look at the UUP, US dollar. This is an ETF. The UUP has been getting hammered. Friday, it bounced up to the 200-day average 2 days in a row. We may see rise. I mean, in general, what you want to think about with the US dollar is that it moves inversely. It's correlated, negatively correlated to interest rates. So as interest rates rise, that creates a bullish pressure on the actual UUP. But I don't know where it's going. It looks like it's technically speaking, it's channeling around the 200. It could drop. It has dropped in a rising interest rate environment recently. Here it did what it was supposed to do, and then the US dollar has dropped since. Now, the US dollar exchange rate strength is related to the strength of other US currencies. So obviously, other US currencies are getting stronger compared to our currency, probably because they too are lifting interest rates. So it's a bit of a matrix, three-dimensional matrix of pushing and pulling, but that's the composite at the moment. What else? Let's look at gold. Yeah, gold is US dollar. Now gold is primarily, it moves related to what the UUP is doing or the US dollar is doing. Inversely correlated. US dollar gets weaker, gold gets stronger. So these moves have been exactly the opposite recently, anyway, to what the UUP is doing. So I'm always looking here because if I see the correlation, the negative correlation broken and gold is rising, then that means that money is flowing into gold, not because of the strength of the US dollar. And that's a sign of risk off. Don't see it. We'll see it at some stage, I suspect, but I don't see it right now. I haven't seen it for a little bit. Oil futures, oil's in a decided downtrend. You know, you all know that oil is weak. Today, slightly up, but the downtrend continues. The downtrend continues. Strong support at 70. We've reached 70. Expect to move to 65. All right, that's what I have. Am I missing anything? Let me see. Gold. So we could look at silver if you want, just for fun. Silver. Now that's interesting, actually. Silver is in a much more bullish posture than gold. Now these are both risk-off assets. Pretty similar pattern, actually. Pretty similar pattern. Silver is cheaper. There's ETFs that track both of these commodities. You can trade them, but this is a beautiful uptrend here. Why am I saying that? Well, I'm just looking. My eyes kind of do this automatically now, but you know what you can see here is a channel. All right, so you've got these rising lows and rising highs. This is a beautiful bullish channel on silver, and you know, provided if you wanted to, we could look. You could look for a bullish silver opportunity. So simple stuff here. I think I got everything. Yes, I do. All right, that's the four corners of the market. Let's hop into our portfolio. And as we started with Anita Ward, you can ring my bell. That's exactly what we've been doing in our sniper portfolio. These are the current trades that are either open or recently closed. And remember this Chevron trade. This started off as a long-term bear call, and we adjusted it into a butterfly. And we were down at one point, $359. And quite honestly, we got a bit fortunate. Let me show you the risk graph. And let me zoom in as well, 155 to 185, so we can see this a bit better. This is where we ended up. Now, when we started adjusting this thing, the stock was way up here. Let's back up a month so you can see how lucky we got on this one. I mean, the stock was way up here. We delta neutralized this thing, and we had capped our risk, our max risk at $405, having already lost 360 or so. So there wasn't much more to lose. And with a risk mitigation distinction at our backs. We mitigated our risk and we waited to see what would happen. And then ultimately what did happen is the stock dropped into the body of our butterfly. Quite honestly, had we exited on Friday, we probably would have lost a bit more. We would have lost about $35 at the close, but certainly if you were in this trade, whatever you lost on this was a damn sight smaller than what you had in the beginning. So this is what we call battening down the hatches, compressing the spreads, throwing another spread underneath, compressing the call spread, and then throwing another spread underneath to get the risk contained to the greatest degree possible. And then your job is, well, just keep on risk mitigating and just keep doing that until the end. And we just happened to get quite lucky on this one. Now let's go to the day before. Maybe we could have exited the day before. Now that was $146 of profit. And you know, I will say what I would have done on this trade is exit on this day most likely. All right, so that was a greatly mitigated loss from 400 down to, let's call it $50, whatever it ended up being. Now we got a couple other ones here. We have this bear call that was also converted into not a butterfly, but an iron condor. And this one got a little hot on Friday. The stock started coming down, but we had plenty of room. Well, not plenty of room. We had a good 50, we had 56 support. And had you held this to expiration on Friday, you would have netted in this trade something like $129 on an iron condor. Converted it. We started with a call spread and then we converted it into a put spread. We added a put spread underneath to generate a little more income and reduce our overall risk. And we generated about 27% on that long-term credit spread. All right, so that one is a winner chicken dinner. And then the other iron condor that we have on is on Northrop. This one's still down 232. And we did some adjusting on this one as well. Excuse me. And that's where we're at on this one. So we threw on a bull spread underneath here. And this one is looking really nice. Strong resistance at 550. This is just a hold, just wait and hold. And if the stock reaches the upper break even, we might adjust further. We might lift up the put spreads, get some more credit. But until this 550 is breached, I do nothing. Don't over adjust these things. Let the stock breathe, let it move. We've got our risk contained. If in fact Northrop Grumman starts coming down, we're going to be in really good shape. Anyway, it looks very quite destined to stay within the balance of the butterfly of the iron condor, 66% statistical probability. So that's a hold as well. Let's take a look at our recent credit spreads. I'll just go through them. This is FUTU. We found FUTU with a new high, the high-low ranker. And if you remember, 2 weeks ago, we placed this trade. Is that right? What's today? Today's the 19th. We got it 14, 30. Yeah, that 2 weeks ago, we placed this, but we found this trade because it had just set a 52-week high, several of them actually. And we ran the put call spread or the put credit spread ranker and found this very high probability credit spread. FUTU was also buoyed up by the China reduction in COVID restriction policies, which has Chinese stocks quite bullish. A lot of them are. And that one turned out to be a nice winner. The other one that we placed on the very same day was LVS. Here's LVS. This was another new high ranker. Same story, exactly the same story. We netted 25% in about 2 weeks on this one. It expired Friday. Would have closed it down for probably 2 cents or so. But whether you let it expire or closed it down based on the rules, you made money on LVS. So that was a nice one. And then last week we placed this PDD trade, Pinduoduo. It's a Chinese online music company. Exactly the same story. The only thing on this one, we used the channel finder to find a stock that was in a nice channel. And that's what we talked about last week was channel finder. So there's a lot of ways to find directional candidates. This one looks destined for a nice little profit by Friday. The 23rd is expiration. Put an order in to buy it back for maybe 2 cents. or let it expire if the stock is behaving nicely. But, in general, follow the rules, have a GTC order in to buy this back for 2 cents, which is just over 10% of what you sold it for. 14 cents was what we sold it for. Put a GTC order in to buy it back for 2 cents, and that will net you 12 cents even while you're not looking. And then if the stock happens to break down below 76.86, a close beneath that point is a time to exit. If that happened today, you'd lose about $176 on this trade. All right, so I'm really happy with our performance. I can't remember the last losing credit spread that we've had. I don't think we've had a losing sniper credit spread. And I'm really happy with what we're doing here. And I hope that some of you that like these credit spreads are enjoying them. And from our standpoint, making some money, whether it be paper money or real money. Okay. So let's continue the educational series. I want to talk about another ranker. So we're going to continue our search for high probability directional candidates. But today I want to talk about stock volume. Stock volume. What is it? Well, let's talk about this first. Institutions control over 75% of the markets. All right, what does that mean? Well, that means that the big money is in charge. Where the markets will go, where institutions take them. They got all the money. If they like a stock, they'll start buying it with their big amounts of money, and that'll drive the stock up. So wouldn't it be nice if we could know their intentions? What are your intentions? Can we see their enthusiasm? Can we see, I'm doing Captain Kirk. I got my fist going like, can we, there's something on the wing. Can we see what they're up to? And the answer is yes. Here's a really valuable distinction. I think I made this up. I haven't heard anybody say it. I've been saying this for 20 years. Volume equals institutional conviction. So we can uncover their conviction similar to an elephant jumping into a bathtub. They can't hide. If they're out buying, millions of shares of stock, that shows up as volume. And then we can basically look over their shoulders and see their hand. You know what I mean? Here's some examples. These are recent. This is on Tal Education Group. And look at this volume down here. Volume speaks volume. Volume is institutional conviction. Splash, the institutions jump into the market buying these shares of the stock at with great enthusiasm, with great conviction, and couple it with that the stock has just set a 52-week high, and you have a very solid bullish directional opportunity. So that's today. You can write that one down. We'll look around for some trades here in a minute, and I'll show you exactly how to do these scans also in just a minute. And it doesn't stop there. This is another one from today. This is on Mankind. Keep an eye. Look at this volume, this big volume spike here. Splash. The elephant jumps into the bathtub. We can see you. We can see what you're doing. And you've also taken Mankind to a 52-week high. Where's it going to go from here? Well, it could go up, down, or sideways. But with the fact that institutions just dumped there's 18 million shares traded on this, you got to believe institutions are ready to take this higher. And that's the idea. That's how we can see their hand. We couple volume with some other type of technical indicator or scanner. And again, I'll talk to you more about that in a minute. Here's one that just came up on the table, and it's called Open Table. That was random. I didn't plan that. Open Table has set well, first of all, it's splash. Institutions are dumping the stock with great enthusiasm, with great conviction, and the stock just hit a 52-week low. Where's it going from here? Institutions seem to want to take it down. So your directional prognosis would be down or maybe not up. And from there, you have a nice directional candidate. Okay. So how to trade volume? Couple volume with other directional tools like the new high low ranker, channel finder, close percentage change, and any number of directional scanners within Tom's tools. We use Tom's tools here. The concepts still hold. You can find, if you have other ways to look for directional candidates, you can couple the volume, find volume in other ways with other tools, but this is how we're doing it here with Tom's Tools. I'm going to just demonstrate these top two here in a minute. All right, and then what do you do with strategy? As always, if you want to go simple calls and puts, you buy a call if you're bullish, you buy a put if you're bearish. You can use debit spreads to reduce the entry cost per contract, reduce IV exposure, credit spreads, super high probabilities of profit, make money as long as the stock doesn't drop very much, or make money as long as the stock doesn't rise very much with high probability, maybe making a percentage point a day for less reward, less return, less money for higher probabilities of profit. That's something we'd like to do here. And then those of you that are advanced can consider things like butterflies, calendar spreads, and various other advanced option strategies. So let's dive in and let's play with this scanner. I think you're gonna like this. All right, I was playing around this morning. I got up, I was commiserating over the Dallas Cowboys loss to the Jacksonville Jaguars. I'm still reeling 2 weeks in a row. Anyway, I don't want to get off on the Cowboys, but anyway, so I got up this morning and I was playing around with this thing. Let me just show you where the ranker is first. If you go to stock rankers and stock volume, you can detect increases or decreases in volume. We can look for absolute change, percentage change. Take the defaults here. No need to play around with these scanners. If you want to know more about what the scanner does exactly, you can click this help button here and you can read away and figure out exactly how this scanner works. In fact, all of the scanners within Tom's Tools have a help button with a great deal of textual support underneath. So feel free to dig into any of them if you want to know more, but it's really simple. You come into the scanner, you go to take Penny Plus Weekly. These are the more liquid, usually higher price stocks. A lot of them have weekly options that expire every week, sometimes a few times a week, and grab it and then hit search. And these are going to be the highest volume stocks that as of Friday. This is Friday's data. And if you look through these picks here, you've got the percent change in volume. These are huge volume spikes. This column here, you've got the 30-day average, you got the latest stock volume, and then the percentage of the average that is. So the average volume for Guardian Health is what, 976,000 shares a day. And then on Friday, the latest stock volume was considerably higher than that. 1, 2, 3, 1, 2, 3, 1, 2, 3. It's what, 14 million shares exchanged hands on Friday. So that is massive. And all of these are. You can look through the stock charts and see the volume if you like. You can look at a stock chart, click the chart button if you want to see a stock chart on Guardian Health. Oh yeah, baby. I like these. I like trading these. Obviously, there was some bad news on Guardian on Friday. The stock tanked. And look at this volume. Massive, massive, massive. Now I'm starting, my energy just spiked up. I'm like, oh man, that's something I can trade. And then what I would do next is check the news. Like, what happened? Something happened. I can click news here and dig in to what actually's been happening. So Guardian Health shares plunged 27% after it released disappointing cancer results. So obviously there's a drug that has not done so well. Let me get let's go into live. Let's look at this live. So GH is the symbol. I'm going to go right here and GH it. And baby, I love these kind of stocks. And if you dig into the news, you'll see what happened. This was probably Thursday when the news came out. Guardian shares down 31% on colorectal cancer blood test study. So obviously their drug is not doing terribly well with the U.S. FDA, Federal Food and Drug Administration, and the stock has gotten taken behind the woodshed and spanked severely with a switch. So here, directional prognosis is, well, I don't know, sideways. Well, there it is. We got our first tick. Stock's trading at 30. So I can tell you the IV is going to be high. So because of that drop, and we might come in here and sell a credit spread somewhere up top. I'm going to put that on our list here as stocks to go after. So GH. Okay, so we could do one at a time like that. But, you know, one of the great thing about scanners is, you know, we can look for other opportunities. We can take these big volume spike trades, all of them, in fact. There are 492 on Friday. So what I'll do is replace and copy all of these stocks into my stock list by hitting replace. Now I have a list of big volume stocks. These are elephant in the bathtub stocks, huge volume. Institutions are doing something with these stocks. Let's figure out where they might be taking them. All right, so now that I have my highest volume stocks, then what I can do is just go through Tom's scanners. I can look through any number of different scanners. There's a lot of them. We've talked about high-low scanner, right? So I could run the high-low scanner as an example. And let's look for the stocks with the lowest close for over the last 52 weeks. Which stocks? Well, the same ones I just saved, my stock list. These are the elephant in the bathtub volume stocks. And then I hit search. And this is going to find the stocks that are at the lows of their day. Look at all these here. A lot of stocks. 46 stocks on Friday set a annual low, an annual low. Riot's in there, PayPal's in there. What was that one we just did? It was 8GH. I've already forgotten the name. Oh, it's right here. Guardian Health. So I'll just do a search for GH and see if that's in this list. There it is. So there's GH in our list. Okay. So these are ones that have just set an annual low. Now I'll run the ranker again, duplicate, and then I'll do the same thing on the other side using the same stock list. So which of those stocks are setting annual highs? Not as many. This is, you know what? Let me just say this. Look at the number of stocks that set an annual low on Friday. I'm not even going to count this 99.81. 46 stocks on Friday set annual lows, and only 5 set annual highs. All right, so that could be considered, and you know, there's a lot of different ways to forecast the market direction, but new highs and new lows is one of them. So there's a lot more new lows than new highs, and that can be considered a leading indicator. So it just sort of adds to the fuel of the downward projection when you start seeing lots of stocks setting new lows and just a handful saying new highs. All right, so we have two lists here. We got one list called My Stock List, and we've detected the annual lows and the annual highs. Let's look at Tau. I like this one actually. This is one I just showed you. I'd like to come in and find a trade on Tau. Why? Well, it's not a very high price stock. That doesn't matter to me. But what's really interesting is that the stock has, this is resistance at 650. And then on Friday, the stock busted through 650 on what we know to be very high volume. Let's look at Tau on a live chart. So there's lots of opportunities here for us. We're going to find one here in a minute. So look, this is the same chart I just showed you. There's our 650. It held for a few days and then boom, pressure built and the stock has popped aggressively above. And then today we're setting another high. That's a really nice bullish directional candidate. Okay. So let's play with the bears to start with. So I've got my stock list here. What I'll do next is just go through this. Oh, hold on a minute. Let's save these stocks in my stock list. Okay, so these again are the stocks that are setting a new low. So I'm going to save the stock setting a new low into my stock list. So now my stock list has a different number of stocks. Actually, let me refine this a little bit more. Let's not take all of them. Let's go down here and take those that have that are within, let's say 5% of an annual low. So this one here on Tandem is about just about 5% higher than an annual low. I'll take that one to consider it. So let's take the top 107, and then I'll refresh the stock list with only those stocks that are setting an annual low or close to it, within 5% of an annual low. Hit replace, and then we got our bears, and then from there, have fun. Single strategy, calls, puts. You could buy a put option. Find the ones that has the lowest percent to double on the puts. Let me get rid of the settings and search. This is one thing you can do. If you're a call and put trader, you can buy puts on a stock that's setting annual lows. And these are some really good looking candidates. Here's Medtronic, strong support here at 76, but certainly in a very nice downtrend, 50 sloping down, 200 sloping down. Very reasonable to buy a put on that one. This put would double with a move down in the stock of 7.73%. Good candidate. Vodafone. Remember Vodafone? I kind of just did. There's another good one. Vodafone is in a nice bearish trend, breaking through support. We know we got some volume as well. Let's look at a live chart, see what it's doing right now. Vodafone bouncing off 10. 10 will be support, but there's your volume down here as well. This stock is tanking on high volume. So you could buy a put. All right, you've seen all this before. I'm not going to buy any puts here. We could also go into vertical spreads and do exactly the same thing. The vertical spread ranker also detects a bearish cross. So if I go after put spreads against my stock list and I hit search, it's going to find the stocks. Now, let's think about what we're going to get here. We got stocks that are setting are close to an annual low. We've got volume, and we've got also a short, long moving average crossover. So this would look for the stocks where the 11-day average crosses below the 15-day average. You can change those if you like. 1030 is another one you could use. The idea is a short-term average crosses below the long-term. That's a bearish signal, a bearish technical signal. A third one. So you can get some even more directional prognosis probability by adding to the mix a bearish moving average cross. Airbnb comes up. What? Let's look at Airbnb. There's your moving average cross, the 11 crossing below the 16. And the stock is in a decided downtrend. Lower highs, lower lows, further downside quite likely at this stage. So Airbnb could go on our list as a potential candidate. So let's put that here. Oops. We got a lot. See, just in a few minutes, we were able to come up with a lot of great candidates. Here's Spotify. There's your cross. Spotify. I wouldn't mind this one selling at 85, call credit spread, or maybe even buying a put. The problem with this one is that there's strong support at 70. For us to make money on this, the stock's going to have to, any real money on this, the stock's going to have to drop below 70, which is currently support. That could stop it from dropping, and therefore our put option would not make any money. Might even lose money. Okay, so that's the spreads ranker. We can go into searchers, single strategy, and you know what I like to do? You know what I like to do? I like to sell credit spreads. We could also take that very same list, my stock list, default parameters short term. These are going to be short term credits. These are the 52-week lows with high volume in them. Search. What do we got? RIVN. Let's take a look at some of these charts. Oh, look at that, man. That's awesome. RIVN is an electric truck manufacturer. And my God, it is in some serious hot water. Prognosis on this one should very well be down. The IV is a little bit high, not as high as it was prior earnings, but obviously the stock's in a downtrend. We could check news as well using the news tab and see if there's any bad news here. Don't see anything on the Yahoo site. but we could also go right into Thinkorswim and we could check the new. Look at that volume spike there. Volume, like IV, volume ain't there for no reason. Institutions dumped this stock with great enthusiasm on Friday, and we could come in here and we can see if there's any news around it. The main news around it, must blame for Tesla sell-off. RIVN stalls European plans. Okay, there you go. That's the news. RIVN has stalled its European plans. Obviously, they were planning to move into Europe. Let me find the stock here, and we can find the news. So, electric pickup truck received insurance. It says top. Okay, wait a minute. Yeah, I don't see. Oh, there it is. No, I don't see the news that's stated right up here. RIVN installs European plan. So that's what's dropping the stock. I don't see it in the balance of the body of the message. But RIVN, another good opportunity for a bearish credit spread. Any of these would be good. So RIVN's on the top here. Let's take a look at this one real quick. Maybe we'll grab it. This is a 7-dayer. Wow, this would expire on Friday. It's got probabilities of profit in the range of 80%. That's pretty good. Let's see what the stock's doing right now on RIVN. It's down. It's set another low. 24 would be a decent place to sell. That's a little close for me. I would rather be up here at 26, ideally 28. All right, so we can start moving this credit spread up a little bit. 7 days. We've got 23% by Friday. So what I'm going to do is lift it up a bit. Let's take it to, let me just see what they're going for. I can go right into Thinkorswim and I can see exactly the kinds of credits we can get. And if I'm looking here, these are 50-cent spreads, which is great. Let's see where the stock is again. Where would I want it? Where's my line in the sand? 26 is as close as I'd want to get. Let's see what we can get for 26. Options that expire Friday. If I sell at 26, there it is. You might get a penny. That's not worth it. So let's go out another week to the 30th. 4 cents. There's no money up there, everybody. We go to January. Only 5 cents at 26. I don't want to get any closer than that. So on this one, I would pass. But it is a good example of how you can use the scanners and find opportunities. Okay. Now, as I just said here, you could also use Channel Finder, close percent change, or any other thing. Let's just try Channel Finder as well. So next, what I'll do is I'll go into stock rankers, and I've got, what am I doing here? So the ones I have are the bears, right? So my stock list now has the high volume bears. And so what I can do here is say, well, let's find stocks that are in a down channel, best down channel on my stock list. Again, my stock list is a list of stocks that are dropping that have high volume. So I'll hit search. Let's see what we get here. Let's just look at some of these charts. Oh, you know what I forgot to do here? I mentioned this in the last video. Make sure that you edit the settings and make the maximum channel width percentage 5%. And let's run it again and get some tighter channels. And KRE comes up on the list. Beautiful, beautiful, beautiful. There's a good opportunity, a bearish opportunity on KRE. Okay, we got about 15 minutes left. That is the lesson for today, everybody. So let's talk a little bit and see if we have any questions about what I just covered. You can do texting, or you can also speak if you like. Just going to read here. Paul said smooth, smooth entry. Good job, Gerardo. Andrew Taylor says also have above average volume on the YM when the golden cross occurred. Yep, that could be a bullish signal, Andrew. And then George says it is their Mercedes partnership paused. Okay, so that's RIVN, George. Maybe we go after, we just did go after RIVN, and unfortunately the options aren't supporting it. All right. So with all that said, let's just go looking at some of these ones that came up on the radar for us. Moderna. I'm going to do a live look at Moderna. And we're going to dig in and maybe we'll do a credit spread on one of these here. So there's our volume spike here. And that occurred, let's see, those two volume spikes there occurred. Let's zoom in. So those two volume spikes occurred on these 2 days here, which is 12/12, 12/14. And then you can go into the news here and look around a bit. Let's see, that's 12/13, 12/14. Okay, let's see. Let's just dig into the news here and see if we can see any good. Moderna's mRNA cancer vaccine shows promise in preliminary study. So that's the main reason. They have a drug, obviously, and a cancer drug, FDA saying it's looking good, and the stock bounced up on big volume, big institutional conviction. There's been some light volume sell-off here. The stock's come down a bit. That's just normal profit taking. And we've got some strong support here at 190 and maybe even 180. So what I do here is let's just run a put credit spread scanner for Moderna. Searchers, single strategy, put credit spread. Moderna, type the symbol in this case, just to make this a little faster. And let's see, and sort by the short-term wizard settings and do search. What's on Moderna right now? There's nothing there. There's nothing there for us at the moment on Moderna, but that doesn't stop us. We can still go in and look to see what's available. So just to get the live data, we could look for December 23. First off, where do I want to sell? What's my line in the sand? Well, I'd say 185 would be the closest I would get. Maybe 180. I'd rather sell at 180, maybe 185. 190 is now support. All right, so that level should hold. Moderna's up a little bit today. It's opened here, it's closed there. That's higher than it closed on Friday, bottom right of that Friday bar. Moderna hit 200, has come down a bit. 190 would be interesting, but not as interesting as 185 or 180. So then with those two lines in the sand established, I come here and I can just take a quick look. So here's my puts. What can I get selling? Oops, wrong way. What can I get selling at 185? 2.5 point spread at 185 for Friday. I could get 66 cents, 50, let's call it 55 cents. Let's call it 50 cents so I can do the math easier. 50 cents on 250 would be making 50 cents on $2 of risk, which would give me what, 25% profit on this one. Is that right? Let's build it in Tom's Tools. So I'm going to options, option chains. I'm going to build this myself. Friday options on Moderna. MRNA update. We'll look at 7 and 14 days on this one. Click update. I want to sell Friday options. Let's do that. Okay, so Friday options, these expire this Friday, sell in the 180, buy in the 170, 750, 2.5 point spread, risk graph. These are Friday's prices, and Friday's prices show a, was Friday 12/16? Yeah. Friday's prices show 19% in 7 days. Wow, that's awesome. Now, and that's at 180, by the way. Wow, 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 wow. Wow, that's awesome. Now that's Friday's data. Let's see what we got here. The one I found was the 185 for 52 cents. Currently, the 180 is only generating 26 cents. We had 2 days of time decay. So Friday's data is the time decay has come out and we make less. 182.50, I could get 50 cents. How about that one? 185, I might get about the same. about the same. Look here, this is interesting. I could sell the 185 put spread and get 42 cents. I could drop it by $2.50 and get 48 cents for the 182.50. That is pretty darn good. Where's 182.50? Well, it's right about here. All right, so that's right about there. So that stock's going to have to keep on dropping below 190, below 185, and then 182.50. We're fine. And this trade expires on Friday. I like this one. It could lose money, showing 43 cents here. Let me edit the actual trade here, and let's get a risk graph reflecting the exact trade we're looking at here, 182.50 and 180. And I'm going to be selling that 182.50. I'm going to ask for 45 cents. I don't think we're going to get that much, but we're going to, let's just say 42 cents. And we're going to not pay, the net credit on this trade will be 42 cents. So I'm just putting in the prices. I got to do it. I messed up there. Let me change this to 42 cents. So this will be, the net result will be a 42-cent credit. Yeah, that's good. That's good. That's a good looking trade. What I really like is this 195 level here that has held so far. Go back charts. 195 up here is held so far 2 days in a row. And we have 190. There's your 195, which is held. We've got 190. We got the tops of these bars here at 185, and then we get into trouble at 182.50. All right, so let's play. Let's play with this one. Probability of profit on this trade, 64%, but that doesn't account for support. So let's go paper trade this one. How many contracts? Now this is $208 a contract, so we'll only do 2. And that'll get our risk, max risk, up to 416. There it is, 416, if we get 42 cents. So let's go ahead and see what we can get. I want 2 of these things. It's a good trade for just a few days. There's your 42 cents credit, now at 45. I'll try for 45. The natural's 27. Oh, you know one thing I haven't done yet? Let me check slippage. Okay. 182.50. Slippage is 20 cents, 16 cents. Is that right? 16 cents on 190. Slippage is fine. It's less than 10%. So let's try for 45 cents here. I'm going to go for 46 actually. Confirm and send, monitor, and then I'll let it sit for a little bit. And I got it. I got it. Wow. I got it for 56 cents in a simulated environment, but I doubt that's what you would actually get. So I'm going to track it at 45 cents. And I'm going to save this in Sniper Live. There we go. All right, since that one's filled, I will post it on the forum. And if you're not using the forum, please use the forum. You go into the website to library, and you click snipers. That's one of your products. And then from here, you can see all the recordings. We have the educational videos that we're recording now. They're shown here. We got resources. And then if you want to go to the forum, click the MWTC forum. And then shortly, right after this call, in snipers, click snipers. I'm going to post this new trade as I did the other ones from the last, well, since I've been going. So all the trades we've done in snipers are shown right here in the library. Okay, so that's a live trade now. Let's go to our list here. First Solar. I'm going to see this. Let's look at solar companies. First Solar. This was an annual high here. Here's the volume spike that came up for us today. That was Friday's volume. Stocks within a hair of an annual high. And let's see what happened on Friday when the stock had all that volume, massive volume, in fact. So that was the 16th. I I don't see any like solid bullish news on this thing. On the 16th, 10 information technology stocks with whale alerts in today's session. So sometimes you'll see these whale reports. What's that? A whale is an institutional trader. And we found this whale traders by using volume. So this is back to my original concept that institutions control most of the market, and we can detect when the whales come in, the big money comes in, and we can get a feel for, what's up. And so then I can come in here and find First Solar. It was a bullish whale that came in. They looks like they sold the 110 puts way down here. I don't know what expiration. Let's see. Do we have that here? Expiration date. They sold some March puts, 317 March puts, March 17 next year puts at 110. So that's a bullish move, longer term move. We can get a little information here. What is this big trader up to? And by the way, they spent $35,000 on these puts. Open interest is 2,800 units of open interest. So that's a really bullish move on an institution that believes the stock will be above 110 between now and March 17. All right, so I like this one. I think this is a good looking trade. Let's review now. We got 52-week high. We got big volume. And the stock seems poised to stay above the 50-day average. We could buy calls on this, but you know what I like to do is sell puts. So let's wrap our day today with looking for a put trade on First Solar. Searchers, single strategy, put credit spread, default parameters, short term, First Solar, search. Nothing out there. I don't care. I'll build it myself. Option chains, First Solar. Let's look at 7-day options and 14-day options. One of the things I like about selling credit spreads right now is that on the 26th, which is a week from today, and then on January 2nd, markets are closed those 2 days. These are 2 extra days of time decay. So if I was to sell a December 30, then I would get 1, 2, 3 days of free time decay over the weekend and the observed market holiday on the 26th. So, and if you sell over here on Jan 6, you get an extra, yet another extra day of time decay on the 2nd. So that's really nice to think about that, because you might be able to, grab some more credit without having the stock move against you. So we'll go back to First Solar. Where do I want to sell? No lower than 150, but that's too close. I would say 145, 140 is what I'd like to sell. 140, super strong resistance there. 140 was breached there on twice average volume on that day. Bullish run above 140. We've also got 145. I think 140 would be a no-brainer, although I don't know what we can get there. So if I look at a live chart, let's change this to vertical. Now, if you have Tom's tools, and later on in the day, you're going to be able to get Tom's tools to give you these prices, but that doesn't refresh until another minute. Now, look at the slippage here, everybody. 16 by 39, 7 by 57. Way, way, way too hot. Maybe that cools off later today. I'll go out another week. Slippage is gargantuan. It's not bad at the money, actually, but as you go further out, at least for right now, you can see the slippage is extraordinarily wide around where we want to sell, which is right at 140. It's already getting more narrow, but that is 11 cents of slippage at 140, 56, 67. That's 11 cents. The max slippage we'd want to pay on this one is just take the decimal point on the ask, move it one digit to the left. So the max you'd want to spend, the max slippage, I should say, should be no higher than 7 cents. So that's a really quick way to determine what our slippage limit is, 10%. Take the decimal point, slide it over 1 to the left, and that is your slippage in dollars or cents. So that's 7 cents, and the actual slippage is what, 17 cents. So way too wide. Can't trade them right now. We have to wait. I do believe, because the slippage at the money is pretty tight, still isn't. 48 cents. Slippage is 60 cents. So the slippage is too wide on First Solar. Now there's some other ones here I'd like you to play with. And, you know, these are the ones I went through and found using news analysis. You can use the scanners, but if you find any that you like, then please do consider posting them on the Sniper thread. And the way you would do that is, again, you go into the forum, you click snipers. This is what I'm going to do here in a minute. And then you say new topic. And then what I'd like for you to do is say sniper, change the tag to sniper trade ideas, and then create a new topic. New trade ideas, what I do. And this is the one I just did, was Moderna. So I'll post this one here in a few minutes, and then you can just copy the risk graph. Well, let me do it so I can show you how to do all this. So then you can, using a screen snippet tool, what I like to do is copy the risk graph, and then I'll paste it here. And then the other thing I like to do is to give the risk graph out. So now that this is updated, I can hit email, and then I do a search on Moderna, MRNA. There it is there. That's the actual risk graph. And there's a link as well. If I scroll down, I look for Moderna down here. This is the link. So this is a risk graph link. I'm going to grab it, just copy it. Control C, Command V on a Mac. So copy, go back to the trade here, and then I click this link button. Boom. Control V, Command V on a Mac to paste the link, and then give it a name here. So this is the Moderna bull put risk graph. Okay. And then last thing is you click create topic, and now this trade is on the boards. So if I go back to snipers, so when you go to snipers now, you're going to see this new trade idea. If you click the new trade idea, you can see the risk graph. You can click the Moderna risk graph button there and pull up the risk graph. All right, that was pretty packed. I didn't think it was going to be that dense of a call. Let me pause to see if there's any questions or comments, and we're going to wrap. We're going to keep these calls to an hour. We're 3 minutes over at the moment. Okay, Andrew Taylor says golden cross on 12.5 on Moderna. I didn't see that, Andrew. Let's take a look. Good observation on Moderna. There you go. Excellent, Andrew. That's a good point. So the golden cross happened here. Huge volume, and we're in on this one. Nice looking bullish opportunity we have at 182.50 on Moderna, and there's a confirming indicator suggesting Moderna's got further upside. Thank you, Andrew. Great comment. All right, with that, are there any other questions or comments? Check out those scanners. They're pretty cool. Gerardo, anything for you? Probably not.
No, I just wish everybody a Merry Christmas and see you all next year.
Oh, yeah. You know what? Thank you. That's what I wanted to make sure that we're really clear about. So snipers resumes on January the 9th. The next 2 Mondays, the markets are closed. So there's no snipers, nothing we can do on those 2 days because they're closed. So like Gerardo said, we wish you all a happy holiday season, however you do it. And if you're in any of the other programs, most of you are, we're going to be taking the week between Christmas and New Year's. So that'll be next week where we're going to take the week off. There's nothing happening during the week typically. So, and we'll say more about that on the calls coming up. the rest of the week. And we'll be saying happy holidays at least 4 more times.
Mhm.
All right, everybody. Have a great day. Pura vida. Much love.
Cheers
See you
to
soon.
seeing you. Thanks. Bye.
See y'all.